So how do you find the most cost-effective CPA or the tax accountant or the tax preparer, whatever name you want to call them? I'm going to go a little bit more in detail. I'm going to explain to you how the costing works, how the industry works, what you should be looking in, how to really evaluate the actual pricing of a CPA. Before I go into that one, I guess I would like to share with you one wonderful book. The name of book, it's called The Art of Being Unreasonable, and it is by Eli Broad. Eli Broad is the same B in the KB home. Eli has brought two companies to the public, so he has built two Fortune 500 companies. He's a wonderful entrepreneur, but he's equally philanthropist as well. Unfortunately, he passed away in 2021. God bless his soul, and I'm proud to probably call him as a mentor. He talks in his book how to really negotiate. So that's what he's talking about. The actual title of the book says The Art of Being Unreasonable, and that in this book he's talking about how you negotiate the price. Keep in mind, he was the young CPA and that he got into the actual construction business. A very interesting book. You will love it. He started understanding how the actual contractor is doing their pricing and so on and so forth. So that is what he talks in the book. What he's saying, if I were to give you very quickly, is that he said that figure out the other person cost. Right? So you need to do your detailed research and the due diligence and to figure out the other person cost, and then you put the healthy margin on it. Maybe 15 to 20% is the healthy margin. You put it so that person is going to make some bucks, some profit, and you would be able to get the appropriate price. So I personally believe it is a wonderful, wonderful way to actually negotiate, where you can get also the great price, and the seller or the other party is also fairly compensated. They are getting some healthy profit as well. And that, as we know, everybody's in a business to make some money, so we need to think about the other person. So that's where pricing model, if you want to really look at, that is what is the one guide. Now the other guide, which I'm going to give it to you, which is we in the industry, in the accounting and tax industry, we something called value-based pricing. We do have many clients, those who are very successful senior executives, those are engineers or doctors and so on and so forth, and these people usually makes a couple $1 million in annual income. Why I'm saying that one, I'm going to take the example of these people. So let's take example of one engineer, right? So one engineer makes say 3 million, and that, by the way, we have so many engineers who makes 10, 20 million as well in the RSUs and options and so on and so forth, which is all comes as W2 income or the salary. So let's say one engineer makes $3 million. There are so many engineers you will find, they make 200,000, 300,000, and very, very talented engineers you will find across the globe, maybe in India, in Philippines, in Ukraine, in Latin America. You'll find anywhere from $10,000 to maybe $50,000 a year. Very, very talented. Now, have you ever then wonder why in the world this big tech companies or this large corporation paid those engineers $3 million, $5 million, $10 million? Obviously, these engineers are not working 10 times or the 20 times of the hours, because we all have a 24 hours in a day. Yes, this might be working probably 12 hours, but then also it's maybe 1.5 times or maybe 25% higher the hours than the otherwise. Have you ever wondered why they are getting paid? So I think that's where we know these are the rare breed, creates the value for a company, and that these are most of the time, these are all public companies, and they have the pressure of the profit, and they understand all of that one. So they would not pay a single penny more if they don't need to pay. They are paying this actually superstar engineers or superstar doctors or superstar senior executive this kind of money because they create that kind of value. Jim Rohn also said that one, right? You get paid in a marketplace in a direct proportionate that value you create. So if you want to get paid more, obviously create more value. If you create more value, then you're going to get paid more. So that's where the value-based pricing comes into play. So I'll give you the example. Let's say you make $2 million. You live in California. Obviously, you're paying 55% or so. Just to make it easy, you pay half the money in the taxes. So you're paying $1 million in taxes. You go to your normal CPA. Let's say he charges you $1,000, $2,000 to prepare your tax returns, right? If you look at the cost, that cost of CPA, then it is obviously $2,000 that you paid in a tax return preparation. But the actual out-of-pocket expense, if you look at, then you paid say $1 million in a taxes, the federal and California state combined, and the $2,000 to that CPA. So now you paid $1 million, and $2 is your total cost. That is what went. Obviously, in CPA's pocket went $2,000. Now you find another very smart like you guys, who is a superstar engineer, superstar senior executive, who is a superstar doctor, or the actual superstar founder, or the superstar business owner. And this firm says, hey, look, that we are going to do the tax strategy for you. We are going to reduce your taxes from the million to $500,000. So now you're going to write a check to California State and the federal combined $500,000 rather than otherwise you would have wrote the check of $1 million. But this firm says that, hey, we are going to charge you $30,000, we are going to charge you $20,000, we are going to charge you $100,000, we are going to charge you $50,000. Let's take some mean numbers, somewhere around $30,000, right? If you were looking at the fees of CPAs, then you say, hey, this my guy is $2,000 versus this guy's charging $30,000. Holy cow, 15 times of the fees I'm paying. But if you look at in terms of your total out of pocket is over here that the $500,000 that you paid in the taxes and the $30,000 to your CPA or the tax strategist firm that you paid. So your total out of pocket is $130,000. So obviously we can do easy math. Hey, look over here, it is $1,002,000. To here I paid $530,000 total out of pocket. So obviously that $30,000 is well worth, even though you technically paid 15 times of what you would have otherwise paid to the other CPA, but every dollar you paid, it is worthwhile, assuming that person is able to reduce your taxes and that person's strategies is legitimate and that gives you that kind of deduction. Then every money you pay to that one, it does make a lot more sense, and obviously we do understand. So these are called the value-based pricing. Now, let's say you say that's fine, I'm extremely risk averse, I don't want to do any strategy, because actually many a time we do come across some of the client and we show them the strategy, and that most of the time all of this W2 earner been brainwashed saying that one, you can't do anything, you have to pay taxes, so on and so forth. And once they hear the strategy, most people are actually fascinated and they like it, and actually they become our client. But sometimes the actually certain people, the fear of unknown, right? They said, oh, I don't know, it's a new, I never heard. But I guess that is where value creation comes, right? If it is heard, or if you know it, or if your CPA knows it, then you would have done it. You probably don't need us, right? So the same way, this actual corporation are looking for the new idea. That is why they pay a couple $1 million to the superstar engineer. That is why they pay this kind of money to this actual senior executive. That is why they pay this kind of money to this doctor, because they can create the surgery. It's not only those people are actually working hard, but obviously they went to the best school, they are gifted in terms of talent. There's so many things, and at certain time the experience with all of this one makes them unique. If this CPA firm that you are talking, that was charging you $30,000, just imagine now it's not only one CPA, there's actually a bunch of CPAs, a bunch of EAs, there's a bunch of highly educated tax attorneys and advanced tax planner, and they come together as a team. And when they're building this plan and all of them are serving you together and you have a solid team behind you, you can just imagine the peace of mind and the comfort and the confidence you have in your finance and in your taxes and going forward. So that is how essentially you can find the good accountant, right? So and that many a time we do the math, but hey, why I'm paying actually 15 times, but if you look at that one, even the 2,000 you are paying, right? So normally, if you know the overall the market, the normal good CPA, right, who has around 10, 15, 20 years of experience, their annual compensation should be in a range of somewhere around $200,000 to $250,000, right? That's what you're looking. Plus these additional expenses, employment taxes and 401k, health benefit, office, technology, all of those kind of things. You're looking somewhere around normal CPA's hour would cost. That cost I'm talking is somewhere around $200. When you include the tax attorneys, the good tax attorneys, right, would be around somewhere around $400,000 salary. And that is what you're looking. And that plus you include the other lauding and so on and so forth kind of things. Now you're talking somewhere around $400, $500 per hour. That's the attorney's cost you are looking basically. If you're really looking for talent, even let's say you're not looking any tax strategy, even doing the right job, it will not be $2,000 to prepare the taxes, because that if you're making $2-3 million, it's not only the pure W2 you're going to have. You're going to have, say for example, multiple rental property, Ks, you're going to have some other K1s. There's some other things. By the way, we do review last 3 years tax return whenever we take as a client. And we were looking and we see this client, the other tax preparer, took the RSU value as zero. So that we found almost $150,000 right there in the actual deduction. So many times, even though that you don't put any fancy or the advanced tax planning strategy, even to do the things right, maybe $2,000 you're paying, that is too less, because it's like that corporation say, hey, look, I'm looking the superstar talent, but I'm not going to pay a couple $1 million in a salary and RSU and option. Then obviously they probably is going to end up getting the engineers who will charge $200,000. I'm not saying those are not that hardworking people, but you are not getting that superstar talent. Or a certain time you go to India, you go to Philippines, you go to Latin America, you can go to Ukraine, you can go wherever places you can find, but obviously that will not be on the American soil. They will not be sitting in front of you. That is what the price you pay. I have learned over the longer term period that generally you will get what you pay for. Even though certain time we are in a denial mode and we think, so hey, I would be able to find the discrepancy, I would be able to find the great bargain, I would be able to find in a cheap pricing, I would be able to research online, and I would be able to implement this one by myself. But in real world, it doesn't happen. If that things happen, then this larger corporation would have done it. They would not have paid to the superstar engineer multiple $1 million annual salary, or to the same this doctor, this hospital wouldn't have paid this kind of multi-million dollar every year in a salary, because you get what you pay for. And that also this other approach is more kind of actual reactionary versus proactive, right? So I pay almost $20,000 for the actual proactive healthcare. Just to give you the example, annual membership, they do all the kind of tests that you normally can't find, cancer to heart attack to every kind of test. You go for a full day, you go every 6 months, you have a team of 6 people assigned to you throughout the year. So there's a health coach, and there's actual nutritionists, and there's other people work with you. So it is all proactive. Out of this one, actually $20,000 you pay, hardly insurance pays a couple $1,000, but it is all not included into your insurance that you pay. So you need to pay out of pocket. But I think that is a choice you make, right? Are you looking for those kind of preventative, proactive, luxury healthcare that only improve the longevity, but improve the quality of life, right? So it is all about one need to figure out that what I'm looking for. Obviously, value-based pricing is very clear. Yes, you're paying $30,000 to that firm, but you're saving quite a bit, many fold of that money in that other taxes. So obviously, it makes absolutely clear. Versus you pay $2,000, but you will end up paying the $1 million into the taxes. So many times we complain that my accountant or my CPA do not reply my phone calls. He's not proactive. But in a sense, that if I were to complain about my normal physician, he doesn't reply my phone call. I don't have their direct cell phone number, or I don't get the appointment right away, or so on and so forth, because that guy is accepting normal health insurance payment. Now, those who are in the health field, they would be able to understand the actual payout from the insurance company went down quite a bit. So that physician has to see so many patients in a day to make a decent living. So now you are complaining that he's not replying or he's not proactive, but he doesn't have a time, or she cannot afford to do that one. So there's again that other mismatch of the expectation. So if you're looking that a physician picks up the phone call, replies the email, becoming proactive, thinking about you, then obviously it is going to cost you money. So one is a value-based pricing. Second one is what exactly you're looking for. Are you looking for that kind of luxury? Are you looking for those kind of proactive services? Then obviously, and that is being actually provided by the latest technology, by the smartest people on earth, then obviously you need to pay for that one. This is probably going to give you some idea when you shop for the most appropriate or the most cost effective, the CPA or the accounting firm, or the let's say for example tax accountant or EA, then that you can do this math for your purpose.